Welcome to TradeSpoon. My name is Vlad Karpel. I'm CEO and founder of TradeSpoon. And today we're going to have our weekly strategy roundtable where we talk about current market conditions. We'll talk about CPI, PPI data. We'll talk about options expiration next week, Fed decision 25-50. And more importantly, how can the market react? What are the different scenarios and what to look for? And where are the opportunities in the market? For those of you who are new, welcome. This is my brief bio. Now, the difference between TradeSpoon and maybe some of the other services you have seen is that, my background is technology. I'm in love with artificial intelligence, neural networks. That's what makes me excited every day when I get up. So I invested a lot of time and money building great team of financial engineers that are, building models, finding signals in the market. But more importantly, not only provide signals, but trade them with real money, real account every day in live trading room. And I've been doing that for close to 15 years on TradeSpoon. Disclosures are very important. Please read them. Trading stock and options involve risk and not suitable for everyone. You must be aware of the risk and be willing to accept it in order to invest in current market conditions. I'm not a financial advisor. I'm not registered with FINRA nor CC. You can pause the screen if you need more time to read the disclosure. All right, let's just get into it since I'm a little late or a lot late. So all my daughters are actually in debate team, and my wife is a lawyer, right? So why am I mentioning it? Why is that important? One thing that they do well is that they can take any side of an argument, right? There is no right or wrong. They can provide the case, bullish case, bearish case, and can very quickly switch their point of view, right, based on which team they are on, right? My wife can represent a client, she can represent, plaintiff, defender, sometimes she represents corporations, sometimes she represents individuals, or vice versa, right? So she doesn't. So trading is kind of similar. You have to look at the pros and cons, right? You should be able to argue the bullish side. You should be able to argue the bearish side. And ultimately, make a decision. I mean, attorneys are also have their own biases, right? When it comes to litigation or debates, right? You might debate pro-life, or you can debate pro-choice, right? These controversial issues, but there's no clear case, right or wrong, right? You can argue both sides. Well, that's probably a touchy subject. Let's talk about something else. Immigration policy, right? Maybe less controversial, but you should be able to argue, for immigration or against, right? For globalization or protectionism, right? They have their own advantages, disadvantages. You can't really say, okay, this is right or this is wrong. Market is very similar, right? You can argue a bullish case and you can argue a bearish case. So if I have to argue the bullish case, the spiders are in strong uptrend, right? If you look at the stock forecast toolbox, the uptrend has not changed, right? If you look at the 6 months, even though the 10-day turning negative, but the 6 months model basically says we're still in uptrend, maybe neutral, maybe it's not as big as it was, back in April or back in July, but we're still heading, slowly towards 600 level, right, in February of 2025. So bullish trend is intact. Interest Fed, very high probability, right? I think right now close to 100% that Fed will start cutting rates in September, right? They'll do at least 25 basis in September and probably another 50 between November and December. Yield is down, dollar is down, VIX is off the highs, dropped to 16. Broadening of the rally, small caps continue to rally. They're above 50-day moving average. Regional banks strong. We have a strong move in silver. Consumer staples are at the all-time high. Utilities are at all-time high. And earnings growth, the previous quarter was higher than estimated, and Q3 and Q4 earnings are also, when we start earnings season in October, for the Q3, it's better than Q2. Continue growth momentum, and stocks like Pelletier or Oracle the AI narrative is alive and well, right? So that would be a bullish case, right? That's the bullish argument that, we tried once to break this level, second time, third time, and forces a charm. And as Fed cuts the interest rate, we are up to the races, right? Going into the elections. So that's if I have to debate the bullish side. The bearish side, kind of the opposite. Small caps are still making lower lows and lower highs, kind of a false breakout. Right, so they're still underperforming, despite that it's above 50-day moving average. Japanese yen, Nikkei continues to be weak, right? We had a steep pullback in the past couple of weeks, another down day for today. Japanese yen, the carry trade continues to, unwind, and yen continues to be stronger than US dollar, right? You have to go back to, we're retesting basically December of 23 level, and July of 23 level. So very important level, and I think we're marginally lower. Marginally low, right? And that's that carry trade, that's what caused the market pullback first week of August. Bitcoin usually is a leading indicator. Bitcoin usually outperforms the market, and this is a proxy for risk taking, and that has been weak. From seasonality point of view, right? From seasonality point of view, usually September is one of the worst, if not the worst, months of the year, right? Usually, right at that third Friday expiration, there is a sharp pullback down going into next earnings season into October, right? And we had the same kind of reaction last year. And then what else? And that, QQQ, without the mega cap technology names, right? You can't really have a strong rally. And QQQ is still facing this downtrend, right? But above 50-day moving average, but you have a downward slope in 50-day moving average, which is considered to be negative, right? So long-term bull trend is intact, but short-term September, October, it's hard to, is this over? And we're going, there's two scenarios. We're either going to break to all-time highs, right? We're either going to break to all-time highs, right? That's scenario number one, right? We did this webinar last Friday. Nobody said that one will happen. We'll see what they say today. Scenario number two, we said we're trading in a range, right? A kind of volatile range, I guess, between all-time highs and August lows. And scenario number three, Fed is late to the game and economic data continues to deteriorate, right? The bearish argument is that job openings continue to decelerate, right? We're back to pre-pandemic level. Housing data is weak. Car sales data is weak. Rise in credit card defaults, potential risk in, if banks have a high exposure to commercial real estate, there's a very high rate of defaults in that space. So the more signs of the recessionary pressure, and Fed is behind doing this small 25 basis points cuts, and we break below 510, right, or 500, the April lows. So how many of you say scenario number one, right? I argued the bull case. You say, okay, great, I heard both stories, but I'm in one, right? Higher highs, higher lows. Maybe you have other reasons. Scenario number two, we're just trading in the range, and scenario number three, we're making new lows below 510. Good morning, Robert. How big of a team do we have? Probably 4 developers and analysts, financial analysts. Not a huge team, but we've been doing this for many years together. What is the difference between range and today's trend on stock forecast toolbox? ranges between the ranges that it's trading. Today's trend is the current trend for today. If you're doing 10-day prediction or the longer prediction. So basically, this is the 6 months predictions for Spider. It basically shows the range is neutral, and predicted low and high is 525.82, and this is trend for the current months. This is the trend for the current months when you're doing a 6 months prediction. It matches this number. So model anticipates in September we can make 2% gain compared to the last months. If we close at the 573 level. So that's the trend. It's not today's, probably for 6 months. For 10 days, for 10 days, it's today's trend. But for 6 months, it's the current month's trend. Range is high while today's low. Look at EA, range is high while today's low. We'll look at, all right. So Robert, 2, Mark, 2, 2, 2, 2. Okay, Bill, 1. Are there any historical trends for 2 months before election? Yes, we are in elections, and from seasonality point of view, usually it's weak. Let's see, elections seasonality chart. Assuming that this is, it looks like they're only selecting elections. So usually during elections, if you look at the seasonality, I'm going to take their word for it, but I've seen other charts that this is correct. September to middle of October is bearish for the equities. It's usually bearish without the elections, and going into elections because of uncertainty, right? You don't know blue, red, here is Trump or maybe somebody else. One day it's so all the uncertainty causes also pullback from the seasonality point of view. Thank you, Bill. Andre, too, can you analyze UPC, RIDE, and JBDI? Okay. So most of you said 2. I'm going to stay in the 2 campaign too. I think there's little room to the upside. Seasonality is not enough to make a decision just because it's, if you take all the average for the past 100 years during elections and during September and it's lower, that doesn't mean we couldn't break out, right? In 1995 was the last elections when did Fed raise rates in 20, I'm drawing back 2015, 1995 and 90. Raise. 2029, 2015, 2015. December of 2015, right? Oh, this is 2015, sorry, 97, 98. So a lot of people compare this to soft landing of 95. Where are you, 95, 97, 95? Yes. Okay, so February of 1995, this is when they stopped raising rates, and they started lowering rates in July of 1995, right? 75 basis points by the year end. Kind of similar situation as right now. So starting July of 95, let's see, July of 95, May, August, July. So they started lowering rates, and the stock market just continued to go higher. A lot of people compare 1995 to current soft landing. So they started to lower interest in July, right? in July of 95, they had like flat months in August, but September, it ended up higher. September actually ended up higher. A lot of people draw a parallel in 1995, and you can look at, if you look at JP Morgan, I'm actually curious as banks should benefit, right? So July of 95, yeah, July of 95, they raised rates, and then August rally, and then it was kind of flat for a few months. It actually was flat for the few months. So now we kind of have the similar situation, right? So the spiders are, not spiders, but JPM is flat, right? Pulled back. And spiders could head higher, right? Assuming it's the same. Right? It could break out, assuming it's the same pattern as 1995, right? So it depends what you look, but it doesn't really have to, right? Because, you know, in 2023, right, the July, September was pretty bearish, right? September, October were pretty bearish last year. So the point is that both scenarios are possible, right? It's a possibility that Fed can surprise us and market just takes off, right? And then Bill is right. Or we could have a reaction like last year where, you know, people are still concerned about recession. The Fed is, you know, they should have raised in July, right? Like they did in they should have lowered interest rate like they did in July of 1995 and not wait till September. I mean, but, you know, 2 months probably doesn't make a lot of difference except the mindset of the investors. Okay, so scenario number 2 in terms of trades. So sorry, question. So EA, looking at EA. Let's see. Let's look at EA. Answer your questions. Range is high while today is low. Not sure what that means. So the predicted price is 141 by 146. So predicted low is 141. We were at 144. The predicted high is 146.08. Where high was 146.24. We're at 146.02. This is just estimated low, and this is the actual. Sorry, this is the actual. This is the actual. Oh yeah. So this is the actual low, and this is estimated low, which is 141.89, 146.08. Let me know, Robert, if I got this right, or if you still have a question. Can you analyze UPC? Let's look at UPC. I mean, I can only do technical analysis, right? This is a pharmaceutical company. They're usually driven by some kind of news, right? Fed approval, disapproval. I mean, this looks pretty bearish, right? You know, so, but I know this is a pharmaceutical company. Tomorrow, if they have news that, you know, FDA approved this drug, then, you know, it's going to reverse. But this is bearish price pattern. You need time to recover or some news. Right, same thing, right? This is very bearish, right? Group technology software. I mean, it's fallen off the cliff. You know, I don't know what the news are, but bearish, very. I usually don't stand in front of the train unless you have a strong fundamental reason, right? If you think this UPC stock, you know, you've analyzed somebody who understands their pipeline of their drugs, right? I assume this is some kind of a pipeline of the drugs. And you have a strong belief that this is just a hiccup and it's just a matter of time to, it will get approved and it will be back at $4, then you can trade this, but this will be for fundamental reason because you analyze their balance sheet, you understand what drugs they're making, and you know what's the probability that they're going to get approved. Then you can do kind of trade based on that. JBOI. It doesn't look like there is a JBOI, a JBDI. JBDI. Wholesale distributors. This looks very strong. The only problem, very low volume. I don't like to trade volume because low volume because when you have low volume stocks, they react on these news and you can have, you know, 10% up, 10% down. plus easily manipulated. One person comes in and buys 10,000 shares, and the stock is going to take off or sell off, right? So I don't personally like to trade. You change into 2 after seeing the chart. Okay, Bill. Okay, so everybody's 2. Okay, fine. Everybody's 2. The good news is that as long as you're flexible and you can demand the both sides, it doesn't matter what we think. Trade what you see, not what you think. And what I see is that very little room to the upside, a lot of room to the downside, until we decisively break above this level. We break above this level, then what I see is a breakout, and then we're heading toward 570, 580, 600. Mark, 1995 is way too back, but this is the last time there was a soft landing. So a lot of economists and a lot of research out there, they basically says when they argue soft landing versus hard landing, every time Fed raised rates before, 2008 or 2007, that's important. This is because they were forced to, right? This is where they planned it, but obviously 98, global currency crisis, dot-com boom, right? Boom and bust. Sorry, lowering rates. This is low inflation, flagging recovery, right? 22, 23 recession when they lower rates. Here's dot-com bust, they lower rates. So they're every time it's red, they are forced to raise lower rates. How is the market crash? They're forced because there is a disaster. So the last time they're lowering interest rate when the economy is growing, the last analogy is 1995. I agree with you. That's, I was in high school back then. So, and it doesn't mean the history will repeat itself. But if you talk to economists or you talk to traders who want to argue the soft landing and counter argument to that we are in a recession and hard landing, this is their strongest argument. This is their strongest argument that last time Fed was not forced to lower interest rates. They were able to orchestrate, soft landing. Obviously, same thing happened in 2007 and 2008, but they were kind of forced to do it. Right? They started actually in 2007, right? They started in 2007 lowering rates, but obviously it wasn't enough to avoid the global crisis a year later, right? So the hard landing camp will argue that it's the opposite. Give me 1 second. All right, any questions? Give me 1 second, something was my network. Any questions? All right, so it makes sense to hedge, right? Since we don't know for sure whether we're going to have 1995 scenario or last year's scenario, it makes sense to make sense to trim your longs, right? And if you don't have any hedges, maybe add to your hedges, or if you already have a hedge, maybe hold on to the hedges. So on TradeSpoon, we offer tools like seasonal chart. We went over seasonal chart. We do have probability calculator that basically you can look at spiders and say, okay, we're trading between 546 and 571 for the next 50 days, 1 standard deviation. Okay, that makes sense. Seasonal chart, we talked about seasonal chart. We talked about stock forecast toolbox. If you want to look at 10-day predictions, 5-day prediction, 1-hour predictions, all of that data is available to you. Okay. You can look at the company screener, that which sectors are leading the market. Strongest sector right now is insurance. Right, insurance is the strongest sector right now in terms of growth. So if you want to invest your money, you go to insurance. Maybe real estate is the next one. So you can see kind of where to invest and what's leading and what's lagging the market. So that's a company screener, a stock forecast toolbox. Active trader. So today I actually trade active trader. There's a daily, every day there's signals. You get 3 bullish, 3 bearish signals. I traded Oracle this week. Tesla, I just initiated the Tesla, put on the Tesla trade. So you get support and resistance level, right? You can either wait for 221 if you see market pulling back, right? And pre-market futures are down because of unemployment data or CPI data. If not, then previous close could be your entrance point. And some of these signals I actually trade in Elite Circle. So in Elite Circle, you can go to Trader Log. You can see all of the trades from today, right? I have Tesla, that I'm long Tesla. I trimmed silver position today. Still, trim VNO, LLY, Costco, VNO, still an Oracle trade. So you have example of both stock and option trades, right? So today, mostly stocks. But I hedge with a QQQ put spread. So this is where you can see all of my position, all of the trades. You can participate in morning bell, closing bell. Keith and I are leading these market sessions. You can watch the recordings, and you can put it, if you're away from the desk, you want to put phone number, or you don't have time to watch, we will send you SMS messages or Discord messages. Thank you, Karen, for your thoughts. Geopolitical risks are definitely, there's still a war between, in Russia, Ukraine, Middle East. So this is all very unfortunate. NVIDIA. So NVIDIA is where the market is going, right? It's been a good leading indicator. NVIDIA pull back, market pull back, NVIDIA rally, market rally. You could argue this is one of the most owned stocks out there. Still a downtrend. So QQQ and NVIDIA is still in downtrend. And these are the trillion-dollar companies, right? NVIDIA, Amazon, Google, they're all underperforming general market. So unless they start breaking out and leading to the upside, right? Apple, you can't have, Procter & Gamble and Coke and REITs pushing the market indefinitely higher. They're obviously helping. That's why the market rally right now. But you can see the mega cap momentum stocks are best description is stalling or consolidating. BJ, is gold still going higher? I mean, there is no overhead resistance. So this is another kind of, when the bears argue, they basically say you cannot have gold breakout, you cannot have TLT breakout, and you cannot have spiders breakout, right? Usually it's risk on or risk off. If it's risk off, okay, gold and treasury should continue to rally. But if it's risk on, spiders will break out, but then gold and TLT have to pull back, right? And it's been like this for a few months. So let's go into gold didn't trade in 2025. But okay, anyway, but usually gold is associated with the risk off trade, right? And gold continues to rally. We see the same thing in silver, kind of the vertical move to the upside. So that is still, would be a bearish argument. What is your analysis, Renata? NVIDIA? Okay, let me know if I covered NVIDIA. SG is the question on SG, is the volume significant enough? I mean, if you're trading options, I mean, 4 million average shares, 4 million is pretty good. Sweet green, yeah, 4 million shares. I mean, this is good volume for option trading. Not the best, but it's good enough. A brief of how I use Gamma and Vena. So yeah. So first of all, let's look at just positioning in general. I mean, Vena and Gamma, it's probably, you don't need to know the difference, right? But what you do need to know is, sorry, wrong side. It's still in dev, so it's still beta. You can see it, but you will be able to see it hopefully in September. That's the goal, to release this. I mean, gamma, right? It's the second derivative, right? So first, think of delta is your velocity, right? Most people understand, basic physics, right? If I drive 60 miles an hour, in 1 hour, I'm gonna cover 60 miles, right? Second derivative, right? It's your acceleration. How fast am I accelerating? I'm going 60 miles an hour, 70, 80, 90, 120, 200, right? That's your second derivative acceleration. So gamma is your acceleration. How much the stock moves, right? Each day, right? How quickly it moves is your delta. And then, for one, no, it's not how quick, but for one move in underlying stock price, the distance, what is the change in delta? Delta, what's the change in stock price, right? That's the delta. First derivative. Gamma is your second derivative. Vena, this is a second derivative with respect to volatility and time. Personally, to me, what's important is the gamma and relative values, not even absolute values. So you basically, in spiders, right? If you do spiders, let's make sure everything is selected. Yeah, you can see that in terms of open interest, you have 550 is well defended and 540. So 540 and 550, you have high open interest, and that corresponds to high gamma, right? So gamma exposure is, how much open interest you have times that second derivative, right? And the idea why these levels are important, because somebody has to trade on the other side. So usually on spiders, you have a put skew. So there's high demand for buying puts. So people are hedging 540, they're hedging 550. I think you guys should. Yeah. So people are hedging here you have 458 million gamma and 5. So $1 billion worth of gamma between puts and calls. And here you have 77 million plus 50 million is 600 million. So 600 million, and here you have, a billion of notional value of gamma between the calls and puts. Right, so very large positioning. That means if the dealers want to be market neutral or delta neutral or gamma neutral, right? If they want to be gamma neutral, as the stock approaches 550, they have to buy. And the reason we didn't break 540 is because of this positioning, and dealers are forced to buy. And you can see, I don't think it's a coincidence that spiders stopped right at the 540 within pennies, right? We're not talking about yesterday, it was 539.96. It's not a magic, right? It's not magic, it's positioning, right? That's what drives the market, right? It's dealer positioning in options, dealers positioning in futures, money floating from bond market to equity market. But these positioning, how people are positioned, is where the line in the sand is. So that's the interpretation, the basic interpretation of, and gamma is just, how quickly it changes as respect to volatility and time. Unless you're a market maker, you don't need to probably know the difference. But as the average retail investor, I think you do need to know where the high open interest is. And you need to look that says, well, September, one of the reasons I'm bearish, because here you have what, 4 point, between all, this is just 4, 2 weeklies and 2 monthlies expiration. So you basically, the notional value is 4.8 plus 2.8, which is what, roughly 5 and 3, $8 billion. So on next Friday, $10 billion worth of puts will expire worthless, right? And same thing with VIX. that means people have to reposition, dealers have to reposition themselves. So if you don't have any news, then they'll just keep, the October will start growing, right? But you can see October right now is relatively small compared to September, right? But if there's any negative news, then the market could sell off, right? What could be the negative news next week? FOMC meeting. FOMC meeting can spark the volatility in the market. You know, after that, we don't have the news, but something like that could spark volatility, but the market could be vulnerable. So let me know if gamma and Vena makes sense. I mean, we can argue hard landing and soft landing. It's like, you know, arguing red versus blue, right? One thing you don't want to be like red, right? You don't want to be Republican and completely avoid arguments from Democrats, right? You can have your own opinion, you can belong to a certain party, but you cannot just ignore. Like some of my friends just ignore the other side. But the same thing, you cannot be a Democrat without having respect for the arguments that Republicans are making. So as long as you can argue both sides, then that's a healthy dialogue, and then you can be a successful trader, because you can just say, well, maybe blue, maybe this time the red, and maybe next time is blue, right? That's why it's good to have a president belong to one party and then Senate and House to the other. You have this checks and balances. But if everybody is blue or everybody is red, well, that's a problem, right? Then it's usually a problem. The stock market is no different, right? If you're always bull, that's a problem. If you're always bear, it's also a problem. You need to be, you know, you need to be able to argue both sides. Yeah, gamma is how fast delta is changing. Yes. The best explanation I can think of is just think of it as acceleration. How fast are you pressing the pedal, right, to drive your car? Yeah, thanks, Robert. Thanks, Kevin. All right, guys. So yeah, elite circle is something you can consider. You can see all these trades. You know, shadow trader is the same thing. It's just you don't have elite circle. You have everything. You have our tools, our picks, right, and you have trading. But here you only have shadow trading. All right, guys, you've been awesome. I appreciate your time. Thank you very much. Have a great day. Keith will do the closing bell, and I will do the morning bell. Thank you very much. And consider, if you're not part of Elite Circle, consider joining. We do have 30-day money back guarantee. Thank you very much, and have a great day.